Hi, and welcome to an early global view. It's just a few minutes after 8 a.m. on Tuesday, April 26th, coming to you a bit later than usual because we wanted to see the impact of U.S. durable goods at 7:30 Central Time, and that was quite a bit weaker than usual. In fact, one of the themes here with the S&P up and overnight trading by a few bucks this morning is that the data has remained very weak. The outlook even for data has been weak, going back a couple weeks ago to OECD composite leading indicators, IMF warnings, etc. But the renewed accommodative stance from the Fed and continued ECB and Bank of Japan accommodation has tended to create, even over the last couple months, a bad news is good news kind of market, of course. Pardon me. And what we have is a situation where a very crowded corporate earnings and central bank month here in April is about to see the last of those influences with the FOMC statement only Wednesday afternoon, and that's followed pretty shortly thereafter by the early Thursday Bank of Japan statement and press conference, and maybe a slight chance of a move in the rate. And the importance of all that is the end of the positive, accommodative central bank influences, the end of corporate earnings season, where, of course, against lowball earnings, most companies have outperformed as usual. We are going to get into a period where the data, and we'll get into how weak it is momentarily, the data will be back being the main influence after this week. So we have to ask ourselves, what has all this meant to the markets? Well, after being only very slightly higher in pre-opening trade earlier today, we now have a S&P 500 that's up at 2087, up about $4 on the day. Now that's very interesting because even though it was at an interim level, we had a down break going back to the weakness into last Friday morning, a down break right at the 2085 level. So if this is starting to take away that down break, and you'll also note that on the MACD, that the market selling off tried to leak out through its lower runaway band, couldn't quite do it either Friday or yesterday. It's getting the bid back. That's going to leave room for further improvement. So if it's going to start pushing back above 2085 by any degree, then it's going to be in a position where it can push higher. And back above, again, the two key levels, the bigger one was 2075 and remains that, with the major up break on the weekly down channel at around 2078. So that's very critical. So 75 to 78 level remains very critical. But the higher congestion above that was right into about 2085. So if they're starting to push back above that, you could be open to some Fed-friendly anticipation today into tomorrow at lunchtime until we see what we actually get at 1 p.m. Central Time tomorrow afternoon. Now, the higher resistance is back up into the 2103 to 2110 area, as we'd noted previous before the market got there, and we'll see more of that on the intermediate term chart. But for right now, it looks like if this market can stay above 2085 today, if the bears can't get it back below it, it has some very good support. What's very interesting is once we get out into the time frame of the FOMC statement release tomorrow, the upward channel, there's a more major upward channel that comes in from off on the left, is right in about the 2072 area, which is right about where the market held yesterday morning as the low of the week. So this low is going to become very important later this week as the tolerance on the 2075 area support and the major 2078 up break. And that pretty much does it for the short-term view of the S&P 500.